Do not worry, I will not try to speak in Spanish because you will have no chance of understanding me. So first and foremost, thank you so much. It's been an absolute pleasure and honor to be welcomed here today, both in Santa Cruz, and this is my first trip to Bolivia, so I've only just had a few days 2 days in La Paz, 3 days here, definitely not enough. But the country's already just really stunned me with the natural beauty and just how welcoming everyone's been. So I'm really, really grateful, and thank you for that. And I'm already working, very much looking forward to coming back, which we're going to be doing later in the year. I'd like to extend my thanks to the UK Embassy in Bolivia for arranging for this. I've had the pleasure of hosting a couple delegations from Bolivia in our parliament in the UK, so it was really an honor for me to come back here. Since arriving, I've had the pleasure of meeting with the Asociación de Bancos Privados de Bolivia, as well as Banco Central de Bolivia, your regulator, ASFI, and the development bank, the Banco de Desarrollo Productivo. And these conversations have been really invaluable in grounding my understanding of Bolivia's financial system, its strengths, and its potential for global leadership in sustainable finance. And I do say leadership because this is a very new area that we're in. Even 5 years ago, I think back to the way that banks were looking at sustainability in the UK. And they've moved on incredibly fast, but we're all still really deciding, figuring out the rules as we go along. And this is where I'm going to give you my favorite fun fact, but it's a really important fun fact for scene setting. So 1494. That was the year in Italy when that was considered the birth of modern accounting, our first book on modern accounting. So globally, as we've all traded with each other and as globalized, we've spent 500 years all coming to a common understanding of what value looks like and what risk looks like. And up to now, that's really been the bottom line. We've taken everything down and said that what's valuable is that number that sits on the bottom line, the amount of money that's in our pockets. And so we've created our laws, we've created our regulations, we've created our entire systems on the assumption that that is value. And at no point have we recognized the work that nature puts into creating that value. At no point have we recognized, particularly in recent years, as we become more aware of climate change, we haven't started putting the risk, that forward risk that climate change has, into those calculations. And that's really what's happening now in our financial systems. And this is why it's going to be so important, because ultimately we're fundamentally redefining what risk and redefining what value means with our financial system. And we're doing it rapidly. We don't have 500 years to do it. We've got, 10, 15 maybe. And so this is why sustainable finance is so important. Sustainable finance is a very broad term that integrates environmental, social, and governance, or ESG factors, into decision making. But it's not about charity, it's not about compromise, it's about financing developments that are profitable and resilient. And I think this is a thing we have to stop thinking that it's either, profit or nature. Those things have to go hand in hand. And as we redefine our financial system and become more inclusive and recognize what value nature has given us, that's really the kind of starting point for us. And so I cannot stress enough that this is such a new area. There's an extraordinary amount of work going on globally, but I even think back to COP26 in Glasgow, which is when I would say the financial system started to really take this seriously and work on it. It's only 5 years ago. Not even 5 years, COP26, COP30, 4 years ago, that this work's been happening. So whilst, different countries are in different kind of stages of development in terms of their understanding and the processes that we're putting in place for this, everybody's still figuring it out. And this is where it's really important to think that if anybody comes to you and says, we've got all the answers to this, they're absolutely lying. Nobody has the answers. And we have to be quite honest that as this all develops, we've all got something to contribute. And I'm looking at the presentations earlier today. It's really important, all of the collection of data, the really deep kind of on-the-ground knowledge is going to be invaluable in terms of developing the sustainable finance journey, particularly in Bolivia. Now, of course, one of the big things that we talk about here is risk. I mean, around the world, all of these different institutions, we're kind of reshaping fintechs. That's right, just a sec, I'm just going to say, that's okay for this slides. I've gone a bit off piece, so they're probably trying to figure out where what I've been doing. What I would say in the financial system, we've got banks, we've got cooperatives, we've got fintechs, we've got development banks, insurers, asset managers. Commercial banks are all really looking about how we incentivize finance going in the right location. That's whether it be launching green lending products, or sustainability-linked loans, issuing green, social, and sustainability bonds, creating impact investment vehicles, blended finance funds, and climate risk insurance. These are all meant to align capital flows with regulatory frameworks that are changing, again, very quickly, and with national climate targets. And digital innovation and the data tools to kind of enhance risk management and outreach is absolutely critical. And again, just kind of going back to the point around aligning capital flows with regulatory frameworks and national climate targets, I know of no place where there's this alignment. It's one of the things that at B4NZ, Inclusive Net Zero, we do a lot, is we look at NDCs, and we look at our regulation, and we look at the public statements and commitments that banks have made, and we map them against each other, and they don't match at all, for the most part. And so slowly, we're trying to pick through regulation, pick through legislation, and get that alignment. And it's going to be a process that takes many years. And I think, we have to be really honest and acknowledge the difficulty that does create. Within the UK, I'll just give you a couple examples of work that we've done. We have focused very specifically on how to incentivize commercial banks to support their SMEs. Again, really basic access to data and having the data that's in a good enough format is a real challenge. Even the most basic data, such as carbon data, is not in a format that the banks feel secure with. So again, we're working with our government now and how we can support our SMEs, try to give them a frictionless access to their data, which they don't necessarily have, not the data that we need, and keep things as easy as possible in terms of acquiring that data. So it's just not a system that we've set up yet. And to a certain extent, in Bolivia's context, you've actually got the opportunity to leapfrog ahead of a lot of things because you're not some of the legacy systems won't be here, but also, speaking frankly, over the last few years, there have been so many mistakes made elsewhere. You can kind of get rid of that pain threshold and actually just hopefully take some of the learnings. And one thing I think that's really struck me over the last kind of just few days is, and kind of doing some reading, that Bolivia has long championed a holistic and integral approach to financing. And one that recognizes the deep interconnection that sits between people, nature, and development. And they've been a strong voice. Some often would say a belligerent voice at some of the COPs, insisting that nature stays on the table and is recognized. But it's the, fair play absolutely been the right thing to do, and it's been a voice that's made sure that we get those conversations in, because there is so much value here, particularly in the nature. Looking through the old kind of the old COP, what are they called? Conferences over the last years, Bolivia's been a really strong supporter for stakeholder engagement that centers on indigenous peoples, local communities, women, and small producers. It's been an amazing advocate for non-market approaches that prioritize equity and sovereignty over purely transactional models. And it's been a huge advocate of the broader view of climate action, one that includes capacity building, social equity, and systemic transformation. And to a certain extent, that is now, and it has taken some time, globally what we're trying to do is to kind of build those things in. So to a certain extent, in Bolivia, you've been ahead of the game in terms of actually what's been has been championed for in terms of our financial system. So that whole vision is actually very deeply resonates with the work that we've done at B4NZ, at Bankers for Net Zero. I spent, when we first started it, quite a bit of time banging on doors of banks. I'm based, just for context, out of the Houses of Parliament in Westminster. And I spent a lot of time banging on the doors of the banks and the regulators and the politicians and the NGOs, who all, didn't necessarily want to sit down together all in the same room, particularly a lot of the NGOs. They said, we can't sit with the banks, they're the enemies. And the banks would sit there and go, the NGOs, they just wrote a big report and told us how awful we are. We don't want to sit with them. And it took quite a bit of time, but we now actually have a really strong collaborative working relationship where you do get your biggest NGOs who have extraordinary knowledge of financial services sectors working quite collaboratively with our financial institutions and with our regulators, talking about what the impact is, and critically with things like the regulators, also really stressing that when we look at risk, we have to look at just the risk of a transaction. What's the risk of inaction? And what's the risk of not acting? And this is probably, when we look at Bolivia in particular, probably one of the biggest things. What is the risk of not protecting your natural assets? And this is not just a risk to Bolivia, this is a global risk, as we know. And that's starting to get a lot more acknowledged within the financial system, to a certain extent. But please keep on talking about it, and keep on kind of fighting to protect it, because it's true. And people are, they're sitting there trying to rack their brains about how can we get money in, bearing in mind that there's currency risk, or there's this risk and that risk. And a lot of people in the financial system now are going, well, whoa, you're talking about kind of fluctuating risk. What's the greater risk of not protecting what we have here and not honestly looking and valuing what exists here? So in terms of the opportunities we've seen here, and I am just, as I say, very new to this. We do a lot of theoretical things, but Bolivia, you've got your abundant natural capital, the rich biodiversity and indigenous general knowledge, a young and entrepreneurial population, and a strong SME base. And these are where we want to look at where there's kind of key areas where sustainable finance could hopefully unlock that transformation. So, can we move on that a bit? Sorry, move it a bit. So that we've got clean energy finance, obviously, some of the highest solar radiation in the world, with many rural areas still lacking reliable energy. Financial institutions can deploy things like community-led solar funds, lease-to-own and prepaid solar systems, and pay-as-you-go infrastructure models that's supported by blended finance. And I'll talk a lot about blended finance, well, not too much, but in a bit. Obviously, sustainable agriculture models and using indigenous knowledge to help create things like sustainability-linked agri-loans, bundled credit, micro-insurance, and climate-resilient investment funds. And these are the type of funds that actually can be designed with local communities and ensure that there's an equitable and not a completely extractive model that comes out of that. With the responsible mining of lithium and minerals, I mean, over the last just 3-4 months, critical minerals has become quite a buzzword, thanks to Mr. Trump and his interest in Ukraine. But it's become much more, in the consciousness and psyche of most people. And in order for that, there's a great deal of work that's gone on in this area and what responsible mining looks like, where you introduce ESG screening and due diligence tools and issue green or sustainability-linked bonds that are tied to environmental and social performance. So again, making sure that it's not just about the bottom line, it's about the impact on people and it's about the impact on planet. And then, of course, SME finance and local innovation. I don't know, in the UK we always say SMEs are the lifeblood of the economy. But then they often feel quite left out and like they've got to battle quite hard for a lot of what they do. Here, with over 90% of businesses, being SMEs, but often being excluded from climate finance, that's where things like your development banks, local development banks in the UK, we have the British Business Bank, you've got an SME development bank that can provide credit facilities, revolving loan funds and performance-based lending. Again, when you hit certain markers, the cost of your credit becomes better as you become more environmentally efficient. And of course, fintechs and the role that this new access to data and fintechs can provide in helping for SMEs. But the big thing here is and I always say, most of the things that we need are out there. But we haven't connected the dots and we haven't knitted it together very well. So despite all the potential that's out there, a lot of financial institutions and businesses really face challenges in accessing their capital needed to scale sustainable finance. So some of the main ones, and I know that this is true here in Bolivia, but it's also true pretty much every place I've been talking about this. Limited institutional capacity for structuring or reporting on complex deals. So the actual reporting requirements that are required to access the big pools of capital. And everybody's always telling me there's plenty of money out there. And most times when I speak to businesses, or even countries, they say, where is it? The high transaction costs for early stage or smaller projects, or projects that don't necessarily have a long track record. There's exchange rate volatility, which I'm sure everybody here is aware of. And then also just the lack of technical assistance to prepare and pilot bankable projects. And this is where, again, to the point I made before, all of these metrics, particularly around reporting and stuff, they're changing so rapidly. Even the really, really big institutions, multinational institutions, have teams and teams and teams of people just trying to keep up with things as they change. And so this is clearly where technology solutions and other people that are trying to keep up with that are going to be really, really valuable, because most humans really can't. It's extraordinary. And so what we do in a lot of finance is we bridge the gaps. We have to find kind of targeted financial interventions and partnerships and collaboration. And this is the biggest part. There's absolutely, if we go about business as usual, we cannot scale finance to where we need it to be with all the changes that need to happen unless we're collaborating. And we're collaborating with our competitors, in pre-competitive collaboration, certainly in the financial services sector. And it took me a good few years to get a lot of our financial institutions comfortable with sitting in the same room with each other, because they all were fighting for their market share. And likewise, to my point before, bringing in outside voices whose primary purpose is on impact. So one of the things that we do, we've obviously got your basic guarantee mechanisms. Your multilateral development banks can come in and say, oh, well, it looks like something's a bit too risky here. We'll take some risks to try to incentivize the main market to go in. We've got blended finance, those are considered blended finance vehicles. Interestingly, we work a lot with philanthropic capital, but rather than, we're going to go build a bridge or build a well or something like that, philanthropic capital is getting a lot more sophisticated, and so they're going in to deals with large, and let's face it, because a lot of the philanthropic capital has more money than quite a few countries. They go in and they offer guarantee facilities. They take the risk of the first loss that might come out of that, to encourage private capital to come in. And then, of course, there's the insurance market as well, which is a really important thing. But ultimately, and I cannot stress this enough, this one of the biggest problems that's talked about, and I cannot tell you how much it's talked about. It's probably talked about too much, and probably a little bit too little action, as we say, is how do we start scaling these transactions so that finance that's sitting and doing its usual things starts to feel comfortable going into areas that are either higher risk or perceived higher risk. And that's an important thing as well, is a lot of times the risk is just being seen through a lens that means that they're perceiving the risk to be higher than it actually is. So there's an area where that education and these data tools and stuff that you've got are really important. So in order to educate the global financial system on what the opportunities actually are. So the big part of this, facilitating the partnerships with your MDBs, your multilateral development banks, with philanthropic organizations, with NGOs, with the politicians, the regulators, and the institutions. And bringing that together and starting to talk about really understanding where the barriers are, trying to break down the misinformation that might occur or be in the system, is really what we're going to need to do to start to scale finance up. And that's really why what B4NZ have been doing, and hopefully we'll be working a lot more in Bolivia on that very, very issue. How do we get that translation service that we need so that the global financial system feels more comfortable getting funds in? And just as an aside, and a bit of as an example, I'm doing the same thing in Ukraine right now. So, an area that's getting bombed every night and every day by its neighbor, and quite intensely bombed. Having been there for a couple of weeks ago, it's the nights are very noisy with the drones coming in and all the rest of it. Even when you've got a risk level that high, where there's a question of whether there's going to be sovereignty of a nation, we can still find the right partners that want to look outside and say, well, what's the risk of not having energy security in Europe? What's the risk of this country not being sovereign? And so even in an extreme circumstance like that, you can get partners that are interested in the opportunities that come from that, from energy transformation, these things. So, no matter how high the risk is, perceived or otherwise, it's about getting the right partners together to really kind of work on that. So in terms of what we can do now, I guess it's, we want to keep the dialogue going. We need to adapt global models, but locally. And again, I cannot say it enough. We've got a lot of approaches. There's a lot of work, but this is definitely a two-way street. And there's a lot that can be learned both ways. So that really active engagement is really important. joining all the international networks, being part of the conversation, making sure there's a strong voice within that will be critical, and then strengthening the partnerships. And so whether you're a business or a lender or a regulator or a fintech or a cooperative, the whole thing is connect, align, and coordinate. The global financial systems, it's changing. Bolivia's got the resources and creativity and leadership to be at the forefront of this. And I'll go back to a lot of the position and the really strong advocacy that Bolivia has shown in terms of the COP process every year. And that has very much been around ensuring that there's that collaboration and everybody's voices are being heard. And it's such an important area. So the point is, though, this isn't about green finance. It's absolutely about economic transformation. And it's an economic transformation that recognizes the value of nature, that is just, it recognizes social value and is future-proof. Because I think what we've learned is that the old model that we've really relied on has put us on a fairly precarious path. So I think that's probably it for me today. I hope that I didn't speak too quickly. I sometimes do. And I really look forward to coming back and hopefully working together in the future.